Roundhill is a pan-European investor. We look for value-add strategies in primarily undersupplied or undermanaged markets. Our core competencies are what differentiates us from other big firms are the local expertise and the dedicated management teams that we put on the ground. And I think that is a key driver of value to our investors. Not just allocating funds, but bringing that in-house expertise, building that team of asset management, development management, and operational management. This we've done successfully throughout the European markets, and our primary investments are accommodation. Approximately 75% of our investments are accommodation focused, from senior to student to multifamily, workforce, and luxury products. We're currently employing about 100 people worldwide. 60% of those are focused on operational and asset management in-house. We feel that that drives a lot of value.
Great, David.
Yeah, thank you. So my name is David Brush. I'm Chief Investment Officer for Merlin Properties. We're one of the new, I guess not so much new kids on the block anymore, but we went public a little over 2 years ago. Done a number of transactions, both single asset acquisitions and also corporate. So today we're a 10 billion GAV company, about 5 billion market cap. We focus really on three main asset classes: offices, warehouse logistics, and retail, both high street and shopping center retail. Our view really was that back at the time we went public in 14 was to really take advantage of what we thought was a very attractive entry point in the cycle. The fact that the economy was really moving at that point, so there was a good macroeconomic backdrop, and frankly the landscape was devoid of competition because the crisis had so badly affected the market. So we really wanted to come in and take up that position as the dominant real estate operating company in the market. And when I talk to our shareholders, we're a public company, I say we really use the U.S. as the model. When the savings and loan crisis in the U.S. and the U.S. created the RTC, a lot of those assets then came back into the market. The REITs played a big role in re-liquefying the market, and that's the role that we wanted to play with Merlin. So today we have, let's say, those three main asset classes. I would say the market's moved quite quickly, so we're now transitioning from being a very acquisition-oriented entity to being much more focused on what I would say selective acquisitions, and much more focused on creating value in the assets that we've already acquired.
Great, thank you, Alfonso.
I'm Alfonso Fernández, partner of head of the real estate practice of GÓMEZ-ACEBO POMBO. We've been around for a number of years already, and our aim is to keep Spanish independent firm and to be able to assist and help in cross-border transactions, be it because of the nature of the client, of the asset, and we try to keep as active as the market is. So we are very happy to have had a good year and looking forward to the next one, trying to be able to help on the different transactions that you all people will be doing, and so this is it.
Very good morning, everyone. Thank you very much, Richard. Thank you very much, Alfonso, for having me here. My name is Manuel. I'm heading the real estate finance operations of Deutsche Pfandbriefbank in Spain. PBB, for those of you who don't know us, is a German specialist lender specialized in real estate finance as well as public finance. We've been around in Spain for a number of years. During the crisis, we wound up under state ownership for a while. Last year in July, we were reprivatized. Business is now normalized. We operate throughout Europe from various locations in Europe. And in Spain in particular, we have had a pretty erratic last couple of years due to the circumstances, and now we're very determinedly back in the market and looking to actually play along these market dynamics that we're discussing today. So really looking forward to that.
So hi everyone, my name is Fátima. I head the Spanish office of Grosvenor. We've been present in Spain for the last 20 years as an office by ourselves the last 10 years. We started the activity in Spain mainly through development and investment, then we moved more into an investment role, and right now we've gone back to our strategy doing some value-add repositioning. We're focusing very much now in mixed-use buildings, concentrating with the city strategy, where Madrid is our key focus. And well, we're just kind of resetting up the business and quite comfortable about the forecasts that Madrid is having and about the specifics of retail and residential going forward. So I think we'll discuss about that.
Thank you, Fátima. Good morning. My name is Jorge Sena. I'm running CORESTATE in Spain. CORESTATE is mainly a Swiss-German investment manager based mainly in the Central Europe, in Germany, Switzerland, and Austria. And 2 or 3 years ago, they decided to go to the international markets, and Spain is one of the targets, and Asia is another story. And normally, the idea was managing money from wealth private individuals from Germany or from Switzerland. And now we are going to step up in terms of the institutional money that is coming to our company. We are looking long-term trends, mainly related with the accommodation, mainly student homes. That is a market that is booming in UK and other markets. And residential too, I think, is another story, because there are big changes in the fundamentals that could be possible to change the mind of the people. And I think next year is very exciting in terms of our activity here. Yeah, thank you.
Yes, hello. Good morning. My name is Miguel Torres. I'm leading the growth for Allianz Real Estate in Iberia. Allianz is growing its real estate portfolio globally. Allianz has a portfolio of 45 billion and has a mandate to grow to 60 billion globally. The first priority is to grow in Asia and the United States because we want to increase allocation to those two segments because we're stronger in Europe. And within Europe, in the case of Iberia, we also want to increase our allocation here. And we do 3 things. You know, we either invest directly in core plus. We also lend money long term, more than 7 years, and we also have an indirect bucket where we invest through real estate funds or joint ventures, you know, to do things complementary to our direct strategy. It could be, for example, to do value add in a joint venture with people.
We heard from Humphrey already that there's low growth still across Europe, but higher growth actually here in Spain, and so Spain in a way is different to the overall European trend. How do you see that lower bond yields? Do you think there's an impact particularly on Spain, on Europe? Do you think we're going to see consistently increased capital because of the low bond yields? Just what's the sense of the macro kind of economic play and how that's impacting your business?
Well, let me start with capital flows, because I think that's probably the start high and then work to the ground. Increasing capital flows to real estate is a phenomenon that's been going on now almost 2 decades. It used to be, when people thought of investment management, they thought equities and fixed income and alternative asset classes. And real estate consistently, and infrastructure for that matter, has consistently grown in the way that pension fund managers and capital allocators think about the asset classes. So they've both become much more prominent. And prior to joining Merlin, I was with Brookfield, for the big allocators in both real estate and infrastructure. I don't see anything changing that trend. So long term, there's more capital coming to the real estate industry in general, and it's coming from everywhere. Again, Asia used to had a very small allocation of capital to real estate. That's now growing significantly, and even with North America, continues to grow. So as a trend, I see that continuing. Low interest rates, in fact, even support that. So on top of the broader macro trend, there's the micro of the low interest rate environment is very supportive of capital flows to real estate and valuations for real estate. So that's a second leg to that stool. Then when you look specifically at Spain, Spain is in fact countercyclical. Very late to the recovery party, and now probably the main player in the recovery party when you look across Europe. The strongest economy, in my opinion, the strongest growth prospects now reside in Spain. when you talk about political risk, Spain is now the adult in the room, as I like to say. It's political stability within a very, very complicated political environment through Europe and North America. And no questions on Donald Trump, please. I know I have an American accent, but no comments. I can't answer them without getting too emotional. So, no Trump. But, so political stability, good economic backdrop. I think the key is, can this current government continue on the path of reform? Because that's what's driven so much of the economic growth in Spain. So can that growth, can that economic, or rather reform, continue with a less strong position of the current government? I'm optimistic that the Partido Popular have enough strength and the direction is in the right way, that there'll probably be a positive surprise, frankly, about the direction that the political will take in Spain. So, very again, good economic backdrop, a much better political backdrop, strong capital flows to real estate. I think it's all pretty constructive for what we see about the real estate market in Spain for the near future.
Okay, good. Be interesting in a way, Fatima, because Grosvenor, very traditional UK company, but investing abroad. One of the things that people expected to happen would be a pause in terms of UK money flowing out to the continent. But what's happening in terms of Grosvenor? Are you seeing more interest in terms of Spain, in terms of countries outside the UK? Has there been any impact at all on your strategy?
Well, we defined a strategy, which is the one we are applying now, that was defined probably a couple of years ago, that is very much focused on city strategy. So we looked around for Europe, and before Brexit, for any other input, we decided that there were 6 cities where either in 3 of them we have a dominant position, or in other 3 our prospects and confidence track record was very strong. And the idea was that we don't look at countries as a whole, but we understand that the world is more volatile, that there's many more inputs that change things, and it was better to put higher equity shares in our deals, to look for core, but to be very, very focused in those cities. So Madrid is one of them. Madrid, Milan and Paris are the ones that we believe have a track record. And then there is the other 3 where we have a dominant position. Surprisingly, one of them is not London. We already have big exposure there. So there is Stockholm, Lyon and Liverpool, where we have very big assets under management that we feel very confident about. That was defined 2 years ago, hasn't changed with all the things that are happening. And the reality is that in many of those markets we invest together with core investors, institutional, big entities. They're quite confident, they're going along with us, but we've moved from smaller capital shares to 50% JVs, moving a bit in the risk curve, doing a bit more of value add, doing smaller deals. So we are a bit more flexible to try to understand what the niches of those strategy cities are. And we are quite happy, and we just keep confirming that strategy as the right way.
Okay, good. And Miguel, just from your point of view, Allianz obviously normally seen as conservative, possibly, or sensible money, but investing broadly across the globe as well. How much do these sort of political risks play into your decisions about the countries or the cities that you're looking at? And have you looked at whether or not you think there's going to be any implications for Spain? Do the sort of political risk things really impact heavily on your decisions here?
No, for sure. I mean, we have to look at the macro context and the political situation. But as I was saying before, overall we are growing. We are growing from 45 billion to 60 billion. The United States and Asia are the priorities, simply because as part of our portfolio we are allocated there, and we want to have a higher exposure to those 2 regions. But in Europe, I mean, particularly in Spain, we like the macro context. I share what David said before. Right now, we also like, we think that we have the political stability to grow, and we'll talk more about the fundamentals. We like the opportunity for values and rents to grow in Spain in the medium and long term.
Okay, good. Yes,
Thank you, Richard. Just a little bit on Brexit. I just moved from London, and it was a surprise for all of us. Quite a surprise. I think as they say, the metro elite were very surprised. The rest of the Brits were not surprised. That's what they wanted. What you expected was a pullback from investors, and for a few months, that's what you got. But what's really happened is some investors, many, are overcoming their fears, the uncertainty, taking advantage of the FX value that's being created, and they're transacting. We just transacted on a student platform in the UK. We've got investors behind us, and we're seeing a lot of transactions still happening and moving forward. On the other side of the equation, those that aren't are moving into other strong countries in Europe. Holland is getting it. Spain is getting some of this capital. Germany certainly getting some of this capital. So I see it's actually been a positive. And for Roundhill, we seek these kind of opportunities driven from uncertainty, volatility, and so in general, I think it's been a positive in terms of capital allocations, reallocations between countries and sectors, and we're looking very positively at this uncertainty and creating opportunities.
And certainly, well, I mean, what a dislocation in the market does create opportunities. It would be good, I mean, just from you, Alfonso, because you're the lawyer on the panel, so you've got to be thinking about risk. That must be keeping you awake the whole time. What's going to keep you awake in 2017? Le Pen winning, Merkel not winning. You know, what's worrying you?
Surprisingly, I would say that the summary of the year, or my conclusion of the year is, maybe this is with that, but no matter what happens, if the market is interesting, things will happen. I mean, we were talking about Brexit, and as Archer said, well, that kept the market a bit calm right after August, but then we're having a hectic quarter. And I think that all the sector is having that. The fact that Trump has won the elections, well, we'll see, but I think that the prospections are not bad. The situation we had with our elections here, we've been without a government for most of the year, and that did not stop the market from moving on. So you ask him, what might happen that could keep me awake? Well, right now I don't see anything in that sense. I mean, I think that the sentiment about Spain, which is key, is very good right now, and it's being supported by fundamentals. And we were discussing that yesterday. 3 years ago, 4 years ago, no one could say word Spain in their investment committees, and now that's the word that rings the bell, and everyone is looking at it. So I'm quite optimistic about what's to come next year. And in terms of a legal situation, we don't see any major changes that might threaten or cause a change in the strategies that all investors are adopting. So it's, for us, is okay. Let's keep up with the wave, and as I said, if the government doesn't introduce any weird measure, which I don't think will not be the case, I think we'll be doing good.
Okay, good. Yeah, go ahead.
Just two quick observations, and one I'll break my own rule. But the first observation is I think everyone's been surprised at how resilient the market has been. I saw the comment of after Brexit, it took the market months to respond, after Trump a week to respond, and after Italy hours to respond. So the market's been very resilient to what historically would have been some pretty significant political events. So that's one thing that I think has been surprising and positive. The second comment I will make about a Trump presidency. If you look at the Trump presidency, the risks really are on environmental policy. He will roll back environmental policy significantly. So very long-term impacts. And there's still questions as to how much that can happen. The federal government in the U.S. only has so much authority and power to do that. A lot of the momentum is at the state level, and momentum is already grassroots. So it's a question of what the impact of that will be long-term, especially if is it a 4-year presidency or an 8-year presidency, which people don't know. Second is the risk, I think, is also foreign policy, because Donald Trump is going to take the real estate negotiating approach to the foreign policy. No one's ever seen that in politics. Bluff, aggressive positions, then to back off again. He's already doing it with China, with the whole one China policy. He's negotiating with China right now as if he were negotiating an acquisition or a real estate deal. no one's ever seen it, and so what does that mean and what could that ultimately create? No one knows. But in terms of economic policy, it's extraordinarily constructive economic. If you look at tax policy, deregulating all the regulations that the Obama administration put in over 8 years, he's going to roll as much of that back as he possibly can. And that's where he does have, with the Republicans in both houses of the Congress, his ability to roll back regulation and to impact tax laws is significant. And that will be enormously constructive for business. That's why the market has, I think it's an 8% Trump rally since the election. So if you take away the environmental side and you can accept the potential risk in the foreign policy side, from the standpoint of economics and global growth, it's actually fairly constructive.
Jorge, in terms of, because you're obviously operating in some of the, what would have been regarded as more alternative spaces before, what's happening in those markets, particularly in Spain, and what has led CORESTATE to particularly drive into the Spanish market? What are the opportunities that you're seeing here?
I think we have a clear opportunity, mainly because I think there are different cycles. Yeah, if you can see, there are a lot of money coming to the real estate markets. It's real because the interest rates are very, very low in terms of historical analysis. But on the other hand, we are in a different cycle in different countries, and this is the case of Spain. We are with a good government at the moment, and on the other hand, we have a strong economy. And finally, I think we are starting to recovering from the crisis, and this is an opportunity because, as Humphrey showed before, we have in terms of prices we are below to the peak, and this is an opportunity to recover some part of the crisis. Another point is the trends that is changing from the crisis. One is obviously the economy is more efficient in terms of the square meters in office market. I think is part of the not recovery of the rental income, and I think is part of this. On the other side, change the trends of the people likes to live, because obviously we are the kings of the ownership in Spain. More than 85% of the people lives in their own houses. And this is changing because obviously we have a high unemployment, and the new workers are going to the market without any security, moving outside to another countries or moving to another cities. And this creates an increase on the rental or the leasing market for housing, for example. This is different in Germany, for example. Germany is changing to the other side because people has a very, very low interest rate, and they prefer to go to the mortgage. To take mortgage and obviously buy in place to let. And this is something that the trend is changing across Europe. We are looking this, and our idea is to try and obviously to prepare asset for this, improve the quality of the asset, because trying to give the standards in European countries. Because I think Spain is very interesting in terms of the student movements, for example, for Erasmus and other people coming, and I think it's a great opportunity in terms of the demand is absolutely in excess of the supply that we have. And residential is another opportunity, and I think it's a clear market for mainly for development or redevelopment, and I think it's a clear opportunity for the next years.
Okay, good.
I'd just like to add a little bit. Jorge, I totally agree with your comments, and we are in similar sectors. I think breaking down the accommodation space, and you've got the student space that we're both involved in, and you're very undersupplied. This is a structural imbalance on the residential, the student side in Spain. You see some of that across Europe for sure, and we're in those markets actively. But here in Spain, you have a 6% provision rate on your beds to students. That's extremely low. And that needs to be accounted for. It's an opportunity right now. Also, the actual product is first generation, old. The current buyer, the current student, he's very aware. The online awareness, the online community allows a very high expectation and an immediate gratification. These buyers want good design, good layout, good technologies and amenities, and they expect them in every product, whether it's student or residential. We're seeing a very high demand for the highest and the most recent technologies and products that we put out. And we're finding very strong feedback when we do produce it. So we're seeing a very strong structural imbalance, and a great opportunity here in Spain across the residential sectors.
Okay, good. And I'll pick up a little bit on that in a minute. But Manuel, in terms of the real estate financing side, how much of a challenge is the fact that there were, I think RCA put something out yesterday as a press release that alternatives were taking a larger part of the investment volume, and certainly from the sessions that we've been doing over the past year, alternatives have come up. We did the first session on parking, for example, relatively recently, 6 months ago, things like that. How much of that is a challenge in terms of financing? And I guess where are we at the moment with financing some of the things like residential and also the main markets? How do you see those at the moment from a financing perspective?
I have a personal view and a company view.
Yeah, which is
I will try to explain that controversial comment.
Which is the most controversial? That's
we are pretty much a pretty conservative, pure commercial real estate lender. So therefore, there are certain alternative asset classes which actually fall out of our strategic scope and therefore out of my personal expertise. Now, we are obviously in the property industry, so you can't ignore what's going on around you, and we definitely see those asset classes coming up very strongly. And my personal view is that given my company's, so PBB's strategy, not just in Spain, but overall, I really regret not to be able to accompany those kind of deals at the moment. I by no means do I rule out that will change, but because banks, we have this silly tendency to just play catch up all the time. So I'm sure we'll get there sometime, or at least banks like ours, because not all banks are the same, obviously. But we do see these asset classes coming up very, very strongly, and I am personally a great believer in them.
And in terms of the overall, let's say, the financing position, we heard from Humphrey that financing wasn't really so much of an issue. What's happening in terms of development finance, redevelopment finance, and I guess loans to value? What are people looking at the moment? What are your investors who are coming to you for financing? What are they looking for, and what are you able to give?
That's an interesting question, because obviously, in my view at least, the property finance scene in Spain has changed very rapidly. If you think about it, the property market has, obviously, and I know this will sound like an obvious statement these days, but if we look back, we can't look back that far. Pretty much 3 years ago, financing debt was definitely not the commodity it's become these days. What is reassuring for me, at least, and a bank like us to see, is that property loan to values, to your question, have remained at what we consider a healthy level. Now, that obviously ties in with certain pricing levels that certain assets are starting to reach, which get you wonder whether your nominal loan to value actually directly relates to the intrinsic risk that you're actually taking on those assets. But even if you are provisioned for some mismatch there, some gap there, I think we're still within healthy loan to values, and definitely comparatively much healthier than what we saw pre-crisis in the prior era.
Okay, good. And Miguel, obviously, one of the things that leads on from that then is what's happening with the alternative lenders, the other part of the market. Allianz also lending. What's the position here? How does that compare with lending activities elsewhere for Allianz?
Sure. We are very active on the lending side. Globally, we may have a portfolio of 8 billion out of 45 in lending, and we want to grow. In the case of Spain, we have been covering Spain, with people outside Spain, and now our want is to originate more locally. What we like about lending in Spain is we fundamentally we believe in the potential growth of rents and values in Spain, and we're focusing on core plus lending. What we can offer compared to the banks is perhaps longer terms, more bullet. We can do variable or fixed. And in terms of specialized assets, we're not lending to those yet. We're focusing more on the investment side. Indirectly, with local partners, we're studying, student housing, for example, is something that attracts us, and perhaps, in the medium term, there should be an opportunity for healthcare as well. And we're learning about those.
Okay, so healthcare as well. So Jorge, go on.
I think we are relearning the financial market, because before the crisis, obviously there are clear division between international banks financing commercial real estate and Spanish banks financing residential. Now, the local banks, the Spanish banks, are taking more activity related with commercial and another type of investments. The point is, in terms of development and redevelopment, it's not easy to explain to them that if you build something to operate in the future, it's not the same that you are developing something to sell very quick and recover the capital, the loan. And I think we are in the process to learning with the banks, to trying to explain what is the way to finance this type of project, because it's not very familiar for them. And I think we need the help for international banks coming back very quick, because on the other hand, it will be difficult to finance this type of project.
If I may pick up on that. And I totally agree with you, by the way. And for international banks, then it depends a little bit on the location. I mean, for a bank like ours, for instance, development finance is obviously not an issue in our home market in Germany or other more mature markets for our organization. But I will admit that in less mature jurisdictions like in Spain, for us, we are even as a commercial real estate lender, we are struggling still a little bit with development. We're not quite there yet.
Good. David, you wanted to pick
Yeah,
up?
just an observation as a significant user of capital and debt capital particularly. I think we've seen the markets deepen and broaden, which I think is good for everybody. The more liquidity in the market, I think the more it will feed the overall investment market as well. So we've done bank finance. In fact, we've got a financing with Allianz, insurance company finance, and then recently done financing in the public markets. We now have 1.7 billion of public debt financing in the market. So from my perspective as a user of capital, and I think also just as someone who wants the market to continue to grow and liquefy, the more breadth that we can see in the financing markets and the more depth in the markets, I think it will benefit everybody, frankly.
Okay, good. Miguel, you wanted to? Yeah.
I was going to say that perhaps our approach is more it's focus based. We're looking for good assets that we would like to have in the balance sheet long term. If they are for sale, we buy. If they're not for sale but we can lend, we lend against them. But we're really focusing, as we were saying before, we're on the safe side, looking for good assets long term.
Okay, Fátima, yeah.
What I would say, in our experience, that we are trying to finance value-add assets right now with, as I said, mixed uses, but mainly residential. What we're feeling is that the market is not mature. There is finance in the market, but the approach each one of the banks has is completely different, which means that if there is not a common element or a common line, it means that it's not mature. So the way the risk is perceived, the importance of the tasaciones, value, the loan to values, how the projects or permits or pre-sales are interpreted. If we just take raw land like Valdebebas or any of these areas around Madrid, is one kind of specific thing. So we say, well, we're not financing the land, we're financing 100% of the capex. And that's quite a standard thing that you can already find today. But when you go into repositioning buildings in the city centre, you say, I'm buying at such low capital values, I'm taking 50% loan to cost. Your risk is absolutely tiny, because what you would like to do is to take over the asset at that value. But at the end of the day, you go through the full process and then you say, well, the market is not mature. So there's a lot of, I think, like Manuel was saying, you feel that personally all the employees of the banks are very engaged with the project, but the risk committees are not as aligned with the situation of the market. So I think we still have a bit of time to get the maturity, because for this kind of assets, clearly it's Spanish banks so far, and because they're not very big and they're not commercial. But it's not mature yet. There is money, you have to find it through quite a long process.
I think, Fatima, if I could just jump in, I think you're dead on. It's been a very interesting time for us over the last 2 years as we've been talking to a lot of banks. A couple of years ago, it was a very commercial approach, and they were lending. Over the last year, there was a lot of willingness for development, residential development, new build, primary and secondary. There was a lot of willingness to lend, but not the ability to lend. What we've seen in literally the last 6 months, as you come out of the core and the primary cities, that lending appetite has grown. And in the last 6 months, we've just started to see coastal lending for development really pick up. I think it's very immature, and I think you see a large discrepancy between the primary banks in Spain on the terms they're offering. Most are shooting around 60 to 65% LTC. They're often giving you all-in cost in the land, but certainly you have to go in equity on the front end. So it is opening, and we're seeing it, but we are seeing a diverse set of terms, and each bank and the risk committees are exactly like you say. The regional directors, the national directors, they want to lend, and they're getting stymied and stopped at the risk committee level. And I think we're slowly educating those risk committees, and I think over the next 6 months in 2017, we'll see a broadening and a more maturing of that market.
We hope. I think it's I think it's a critical timing for this, because obviously there are a huge amount of capital coming to the market, and development is critical for this, because we need to create a new product. On the other hand, the prices could be continue growing, and I think it's not very good for the sustainability. It's not very stable for the market. Yeah?
A quick question for you, Fatima, which is, you said Madrid, but not Barcelona. Is that because we're in Madrid? And if we were in Barcelona, you would have said Barcelona. Is that because you're not looking at, although it's a city, it's more coastal, and therefore that doesn't fit in with your strategy, or?
Well, not really. Actually, we've always had more activity in Madrid than elsewhere. So it's a place where we are more comfortable, kind of long term. It's a place where we've had more play. But I think it has to do a lot with the sector. So while we were doing offices, obviously Madrid is much stronger. But still, you have only Madrid and Barcelona's markets. When we were doing retail, I believe retail in Barcelona can be even better, high street, than Madrid. But we're not any longer doing any of those type of assets. We're doing more value add, and we feel, because we are a core investor at the end of the day, so the type of risks we're never going to be taking. Planning risk, just going for works permit, kind of risk, low risk profile assets. And I think it's easier to get them in Madrid when you're very familiar and when you understand what the process is. And I think for value add and the latest experiences many investors have had in Barcelona, they're not low risk when you have to do significant work, so you have to do full repositioning. So we say, well, does that mean that we're never going to be doing anything in Barcelona? No, we have a high street European vehicle. We've been mainly bidding in Barcelona because we love it and we think it's very, very strong. But to do value add, we say, let's focus here, let's specialize here, let's put all our tools here, and then we'll see in the future. But so far, it's a question more on that strategy concentrating in specific divisions.
Okay, good. Let's cover a little bit about some of the other sectors. David, obviously, in a relatively short space of time, you've moved to becoming one of the biggest owners of retail here in Spain. How do you see that market? Why the particular interest in retail? Why have you been aggressive in the market in terms of building that up? Where do you see that heading?
Well, I would first kind of retail is such a broad category. So the first way I describe it is our strategy in retail is the combination of go big or go urban, which actually I stole from one of our tenants who said that's what their tenants are doing. When they look at, because there's all this talk about online retailing and the move toward sales going online, and it's definitely happening everywhere. So retailers are saying, I've got to manage both an online and an offline and a physical footprint. So they're going to be reducing their physical footprint as more and more things move online. But where they're reducing their physical footprint is more in areas where going online is easier and more attractive for the end user. And that tends to be where you live far away from the center, where the center doesn't have any particular identity other than it's a place to go pick something up and then leave. So from our perspective, we want to be urban, where a lot of flow. The value means you can actually invest CapEx to create unique type of centers because the rents are going to be higher and sales are going to be higher. That's hard to do in a low rent, low value center. You just can't get the return on the CapEx. So it's either urban centers or it's large dominant centers like Marineda in Lucknow. So that's really our strategy. And then within those centers, much more in the way, it's more an experiential, that's the way retail is going, it's going more experience. So trying to create, we're in fact just down in one of the centers that we just bought with, through Metro Bethesda, we're bringing in Parque Reunidos to do one of their small mini kind of experience parks within that center. And that's the kind of thing that we're moving when we look at what we're doing within the retail space. So big centers, urban centers, more experience. I think if you create that, you're seeing the underlying demand. And I came in just at the end when the presentation was being made, in our own centers. And we now have over 500,000 square meters of space. Only Unibail have a larger footprint in Spain than we do. And we're seeing very strong underlying sales and footfall growth in those centers. And we're seeing it also, it varies across markets and across product type. And so it reinforces for us that those urban centers and dominant centers are the ones that really, I think, are benefiting it. So we know there's going to be this movement and this threat from online. So we're focusing in that particular area. We think we have a better opportunity to actually combat that.
And it was quite interesting. We did a session on retail trends, and one of the things, picking up that point, David, was actually a lot of people talking about actually hospitality and retail getting closer together in terms of providing that experience that you've either got to be convenient or it's got to be great fun or a great experience, and that would be part of how you change the space in a way.
And again, you can only really do that in situations where you've got high value, high sales, because the CapEx required to do that is fairly significant. So if you're in a smaller center, or if you're in a center that's in a secondary location, it's very difficult to justify that investment.
Okay, good. Miguel, interesting to get from you as well a sense of the market at the moment from an investment perspective rather than the lending perspective. How are you seeing the specific sectors? Are you looking more at retail, more at office, more at the alternatives? What's your sense of that?
I think we're looking at several things. We like the office sector. We're looking to invest directly in core plus. Indirectly, we're looking to have exposure on the value add, through partnerships in Spain. We're focusing in Madrid and Barcelona only because that's where we like, the liquidity. Shopping centers, perhaps, along with what David was saying, we're focusing on large dominant shopping centers. We think that, we are long-term investors. We think that those are the ones that are more resilient to e-commerce, internet, and those are our main categories. Then logistics, we also have a bucket for those, and there we would like to invest in partnership with the local operator of logistics. We don't think it's a matter of buying an asset. We think it's a matter of helping someone grow faster, and those, I would say, those are our core three sectors.
Okay, good. One of the things, just briefly with you, David, something that I wanted to pick up is a discussion that we were having earlier, actually, over dinner yesterday, which was that you've obviously got the lock period for the SOCIMIs, who are now, instead of being able to just invest, will actually also be able to begin to sell as well as invest. Do you think that's going to have a big impact on the market, and is that going to change the strategy of Merlin and of others?
Well, I think it's very unique to the individual companies. I will say for us, flexibility on that will be very helpful because we've grown through as a 10 billion company, 6 billion came through corporate acquisition and 4 billion came through individual asset acquisition. So in corporate acquisition, you always have some assets in there that you would rather not own. So we looked and said about 10 to 15% of our portfolio from those acquisitions were things that in the long term we don't want to own. And we've already been selling those just because some of the benefits of the structure allowed us to do that. So in the future, anything that makes that easier and allows more flexibility, you can then sell those assets if you think in the long term are not really going to generate as much value and redeploy that capital back into your core activity. So for us particularly, warehouse logistics is something that we'll do as much of it as we can get our hands on, to be perfectly frank. We own and control 1.7 million square meters of space. That we've all built up through, again, both corporate acquisition, and the underlying strength in that market is significant. Much more now through build-to-suit and forward development, because one of the comments that was made, and I agree with completely, every acquisition we look at right now, there's so much functional obsolescence that I look at it and say it's land value less the demolition cost. And then I've got to use, so everyone says I'm getting an 8% yield, but yeah, you got to use that 8% yield to amortize your basis, because when that tenant leaves, you're going to scrape the building and build something new. So don't count that income yield as income. It's actually amortizing your cost. Nobody I talk to thinks that way. They all think, oh, I'm getting a leverage 15% return. I'm taking my 8% current return, turning it into a leverage 15, and at the end I'm going to sell it for, even if I sell it for what I bought it for, I'm making a huge return. I think that's very flawed. So we're actually more building new product because the standards have changed, the tenant demand has changed. So you have to be building product that really fits either 3PL, e-commerce, or logistics provider. That's really that's where the market that is today. So I'd rather sell those assets that I think are non-core, don't have the same growth potential, and redeploy it into assets where I think I'm getting a high current return. And I don't think there's as much growth in value in logistics rent. Only supermarket operators are more tight on rent paying than logistics providers. But you're starting off with such a attractive yield. If you only get inflationary growth, you're still able to get, I think, from the yield compression, I think we'll see some pretty attractive returns from it. So recycling those non-core assets back into core activity, particularly in warehouse logistics, is, I think, that's a big part of our strategy going forward.
Okay, good. And Roger, I don't know if you're, just from a general perspective, whether you're happy also to share your kind of views on how that strategy might change for the SOCIMIs, and do you think it's a positive thing that this because I think you would be one of the first ones who will come into this process. In general, for the market, do you see that as being positive?
Just for those who don't know, I'm an independent director on La España, SOCIMI. I sort of answer with a hat. I think David is absolutely right. Every case is different, and I think you have to come from a starting point and probably asking 3 or 4 questions. Why are you selling? What are you selling? When are you selling? What was the 4th one? How do you sell? And I think especially to the agents here, and advisors here, I think it's very important to just understand that there's not just the sort of real estate capital markets dynamics, but there's also the corporate capital markets dynamics, listening to what your shareholders and analysts say and what they expect. If we sell, we have to distribute a significant part of the capital gain any rate. How are you going to reinvest the money? Because probably shareholders are not wanting cash. And I also think there's a key issue about which will provoke rotation, and that is, are the investors happy with valuers' opinions, or do they actually want to see concrete evidence of sales being realised? We have already said that we will be starting to rotate non-strategic assets. We just beat Merlin to our flotation. That means in March next year we have 3 years as a quoted company, but we don't still have 3 years with any assets because we quoted with cash. And it's not until I think it's June that we've got 3 years. We are obviously receiving lots of unsolicited off-market offers, and there's a big debate, as I say, around the 4 questions. Why are we selling, and what do we sell, when do we sell it, and how do we sell it? The how bit is, do you do an open market process, or do you do off-market deals? Because we are, like everyone, trying to find off-market deals to buy, so perhaps off-market deals to sell make sense as well.
Do you think that will then mean that there will be a little more movement in the market and that will create opportunities for you, or not?
Well, it depends if what they call the non-strategic maybe stakes that
What
we
they
don't
say.
want as core. So, how they sell it. I'm not sure anyway if the company, the off markets, will be well understood on how you sell. That's the question I leave in the air, but that's something that is there. Well, for us, and this is something which is quite open with all the advisors we've had, we started bidding on shopping centres, trying to come back to the market at the same time as SOCIMIs were set up. The first bids we did, we were very much in line with the pricing. The latest bids we did, which I think we stopped like maybe a year ago, we were like 20% below. And that's it, we couldn't buy it. We couldn't be as competitive because we are a bit more conservative. I'm not the one producing the growth curves for markets. We have a research team that says, this is what the company believes, which is good for me at the end of the day, because that makes it very, very objective. And it helps feeling that the risk is controlled by the company in a centralized way. And that's the way we work. So it has its good and its bad. So at the end of the day, what we've done is to try to see what are the niches where there is less competition. Sometimes smaller assets, non-income producing, assets that have to remain vacant for some reason during a certain period of time. But then we are competing with the high net worth individuals, we're competing with other buyers. But we have to find the way through. But I can say that now that we've moved to the value added and not just on the retail side as we were working, the pipeline and the sourcing we're able to do is much, much larger than the one we were doing maybe 2 years ago. There are plenty of things, but thinking, I'm a core investor, so I want to do value add repositioning. How many assets have I had the opportunity to look at this 2016? There's far more because there's more market, and I think we have to thank that to the SOCIMIs, because probably there were plenty of private owners of buildings around Madrid who never thought that the market was back until there's all this noise, there's money, there's liquidity. So on one hand it's competition, on another hand we needed to dynamize the market, and we're very thankful to the SOCIMIs for doing that, although sometimes we're not as happy.
We're thankful to private equity, because, and that's the normal market relocation cycle, right? Private equity came into Spain when everyone else was running the other way. And some early people took some bold moves, Orion being one. I see in the back my friend from Orion. So, but others came in, and we came in on the back of private equity, because private equity then, prices started to move, opportunities became less, and the SOCIMIs then, again, played that big reliquefaction role. And on the back of that, a lot more market activity happened. So it's interesting to see. I started off in private equity. I've been in the business for almost 30 years, and it was mainly private equity. This cycle has played out almost textbook, just a little quicker. But in terms of how it's happened and how what stimulated the market at the beginning, how it's evolved, how the finances moved on the back of it, and then deepened and broadened, you could see this in almost every cycle previously. So it's been a textbook market recovery in terms of how it's played out. And now you're in a situation where you're at that very, I think, inflection point where it's much more difficult today than it was 2 years ago. Because at that inflection point, you're saying, has so much liquidity moved into the market where people's expectations of future growth start to drive so much of their pricing expectation. So can you really rely upon that growth? 2 years ago, you were just trying to say, is it going to be the same? And I'm buying it. If nothing happens, the going in yield is enough that I won't be happy with returns, but I'm not going to be particularly concerned. Now, some of the yields you're seeing on early acquisitions, if the growth doesn't happen, it's going to be very, very substandard type of return. So we're in that point now where growth isn't that added return that you get. Growth is where the majority of your return is going to have to come from. That's always the dangerous inflection point in the market.
Where should people invest? So, if for example, we're being offered money, lent money, however you want to put it, where would you invest it? So you can choose to invest in Europe, you can choose to invest in Spain. What do you think are the most interesting investment opportunities here at the moment?
Well, I personally think that Spain offers one of the most attractive opportunities in Europe right now. because of the growth potential. I think that there is room for rents to grow. It's true that yields have compressed significantly, but there is still a growth story in terms of rents, at least starting to go back to the prior peaks as well as the valuations. And then where to invest within Spain, it really depends on your investment approach. No, I think that value add in Spain, there is a lot to do yet. There are plenty of opportunities there, for example.
Okay, good. Okay.
I agree with Miguel. I think Spain is a target for investors today. It's a clear fundamentals are strong in terms of economic growth, political stability, and obviously low interest rates. Obviously, we are monitoring very close the inflation because I think it's a risk in the future. Finally, that there are some activity in terms of oil prices, and that there are a lot of money in the market. But development and redevelopment obviously is a good opportunity because we need to reposition the assets. There are very good assets that needs to be improved and to be modernized. I think is in this way, financing is very key. Yeah.
What I would say is that we still have a market which allows to drive the appeal by capital values. I think that's what we have to look at, because at the end of the day it's true that the rental growth is what it supports, but for me we already have some kind of overheated things looking at the yields, and we'll see what happens with the finances and if the interest rates change. But I still feel that in Spain we have many capital values which make full sense, combined with the opportunity to deliver things that did not exist before, because we have to think that during the last 10 years there has been no repositioning, no development, no nothing. So as David was saying before, offices are dated, it's almost impossible to find grade A space of offices in the right places. Shopping centres concepts have changed, logistics has changed, but even residential. We have to think that the world has kept turning, but we haven't developed a single house in the last 10 years. So are people aiming to buy the same thing, or can we produce something which is different and we can make a difference in the market, so we buy the right land or the right building at the right pricing in terms of capital value, and maybe we have to invest slightly above. But there's an opportunity to say, well, you have something different that is very, very appealing for the market, and I think it is a very good way to add value. It's brand, it's products, technologies, being ahead of many things, and I think Spain is a great opportunity for that because we come from a desert.
Okay, good. I'm an American investor scared off by Trump, and I'm coming to Spain. What should I invest in, Manuel?
I will be much more brief than my colleagues, actually. Logistics is my bet.
Logistics?
Yeah.
Okay, great. Alfonso, where should I put my money?
I always say to you, I'm just a lawyer, but I'm
Not just.
Yeah. Think of the fees if I take your advice.
I said that. purchase everything. No, I think that there has been a lack of good product, and that's due to the crisis. No one knew if there would be tenants or buyers to rent or to buy the final product. Now, apparently there will be. And what they're finding is that there's not the right product that they're looking for. So I think I would take a view on investing in development and redevelopment. And if I had much more money, I would, of course, buy some shopping centers as well. But just to keep money coming in. But if I had to make a medium long-term investment and fundamentals remain and they keep on going up, I would try to develop things. Offices, good quality offices, and logistics is I would agree also with Manuel with logistics, those two. But on top of that, I would still have my shopping centers, big or urban, as David was saying.
Okay, David.
So I would say the same things that we saw back in 2014, I think still exist today. Maybe not to the maybe not they're not flashing as green as they were, but they're still there. Attractive relative value to any other market that I look in Europe. Good economic backdrop, and add to that now, political stability, relative political stability. So I still see all of those as being very constructive for investing in Spain. Second observation I'll make, I'll pick up on what Fátima said, because I think it's actually, we're doing it ourselves. It's kind of an interesting question. You know, we have a major CapEx program that we've outlined as these acquisitions that we've made, particularly in retail. In warehouse district, we're building new, but in retail particularly, and in our office portfolio, of really going in and reinvesting to improve the quality of the space. Because the bet that we're taking historically, and particularly in office, Spain, the knock on Spain is that the quality of office space relative to the rest of Europe is quite low. And it's one of the things I think we've been getting more engaged, involved in the whole strategy of how do we attract businesses to Spain from London as part of Brexit. I don't know what it will lead to, but it's a low risk proposition. Right? It's something with high upside and no downside, so why not do it? And one of the points that we've been kind of hearing is that it's not, the availability of space may be there, but the quality of space is not. So throughout our portfolio, both in terms of not just energy efficiency, floor layout, quality of, even as simple as the quality of the environment in which the building sits, we're putting more and more effort into improving that. Whether or not that will pay off in terms of higher rents, the jury is still out, but we're taking the bet that it will, and that just to be competitive in the market, you're going to have to do that. So a big part of our strategy in both retail and in office is to invest in the buildings to improve the quality, design, layout, and update those so that we're more competitive in that kind of environment. I know it's not part of your question, but I thought it was worth talking.
Good.
I think we need to look at the infrastructure of Spain, the amazing highways, roads, and airports, and that unused capacity. I think
As Americans, we can appreciate that.
we can yeah, certainly. Maybe there's one positive on the current president. That's right. So I think we need to look at that capacity, and it's very important to drive those tourists that are coming in. It's something we haven't hit on today. I think it's very important. 10 or 15% tourist growth last year to this year, and another 10% next year is predicted. That's 80 million tourists in Spain, over a 50 million population going to 60 million. I think there's a stickiness factor, and I don't know the right term, please guys jump in, but there is a stickiness factor through the next cycle that I think these tourists, some of them are going to buy houses, some of them are going to buy rental houses, invest in Spain. They're going to stay. I don't know how many or how much. I think it's very important. My investments would be focused on the accommodation sector. In the urban cities, I see students, I see redevelopment. In the coastal areas, I see second homes, which I see an explosive growth right now. And I think that's where I would push my investors.
Thank you very much for joining us, and have a very good festive season, everybody. Thank you.